Hello, everyone, and welcome back to another episode of the Market Outlook series. I am Kavita EXP, the founder of EXP Invest, and we are back on a holiday on the occasion of Good Friday to talk about Nifty, Bank Nifty, and the Intersector Analysis. What we are trying to assess today is whether Nifty is going to actually go over the all-time high and sustain the rally, or are there signs that point otherwise? So let's get started with the 3-minute time frame of Nifty and make our way upward to get a better assessment of how this wave is unfolding. Now, like every session, the progress of the session is going to go through all the charts of Nifty and then Bank Nifty and then the Intersector analysis. And then I will be answering your stock requests. If you have stock requests, then don't forget to ask me your stock request by filling up the form. I'm going to share the information about the form in just a moment. Let's switch over to the chart of Nifty and share our screen with you. So this is the link that you need to open, expinvest.in/stock request. And when you open this link, you will be able to see this form. You need to fill up this form in order to get your stock requests answered by me during the live session. I will be taking about 10 stock requests in this session. And if you happen to fill up later, because remember, this is fastest finger first, your stock request will be answered in the next time I come live, and my team will communicate my response to you. So I will be telling you the stop loss level, the target level, and an actionable advice, whether you should continue to hold, whether you should add more, whether you should exit, or whether it is a good time to buy the stock. And I would be connecting you with my team so that you can ask us for follow-up analysis in the future session. So I'm going to leave the link on the screen so that you can visit and ask your question. But for now, let's get started with our analysis of Nifty. So this is the 3-minute time frame of Nifty, and these lines that you see with numbers, these are the Elliott wave counts that I have done. Last few weeks, you might remember I said that I expect, or as per my Elliott wave count, I am noticing the end of a fifth of fifth wave. Usually when the fifth of fifth, or rather when a intermediate level impulse wave comes to an end in the Elliott wave theory, it is followed by a correction. So we've already seen first leg of that correction, which ended exactly at about, or rather between the two support zones of 21,650 and 21,850. And then we've seen a retracement of that correction, almost 100% retracement of that correction, which ended yesterday with a very sharp correction. So the resistance level of 22,000, which we had stated and which has been drawn on the chart since many weeks now, reacted, or rather resisted the price really beautifully. 22,500 is exactly where the resistance was forged. You can see it right here. And now we started to go lower. However, let's take a look at let's go back to the 3-minute time frame. And what I can sense is that the 3-minute time frame did suggest this beautiful bullish range shift right here. And what I see now, that since the last two sharp corrections that we noticed on the price, right? So this one correction and this one correction. Now this correction, the second one, is obviously higher in magnitude. The first one, not so much. However, the momentum with which the price fell there suggests that more weakness can be expected in the market. Also, negative divergences have been forming on the 3-minute time frame. It's still a little bit premature, but I think there are early signs of potential weakness in the market. Obviously, the important resistance at this point is 22,500. Moving on to the 15-minute time frame, there has been positive activity since this trend started unfolding. And so far, I don't even see any negative divergence unfolding per se. We might see a retest of 22,500, or we might even see a temporary higher high here, 22,600. But I would like to remind you that we've ended the financial year from a stock market perspective. The next working day that we see, or next trading day that we see, is going to be part of the new financial year, which means that this entire month of March was the tax loss harvesting season. So loss harvesting season has historically not been positive in the market. The last 2 weeks of this month has seen positive momentum, pretty much covering the entire month's activity. However, if we go on to the 75-minute time frame, the 75-minute time frame's activity have been quite subdued for a long time now, and it has not yet picked up, I would say, in momentum, even though price is back again to almost the lifetime high. If you see, the RSI is still shy of the level of 65.70, whereas when the momentum was pretty strong and the rally was unfolding with strength, the RSI was testing well above the levels of 80, right? So my analysis suggests that we might experience another leg of downside. Now, whether this leg of downside is going to happen as swiftly as the first leg of downside happened, or whether this is going to be more of a consolidation, which might end up 21,850, or whether it's going to be a swift correction which takes us all the way to 21,000. Unfortunately, there is no way of predicting that. We have to go with the market flow. So what would be your best strategy given this situation? Before I go into what your strategy for swing trading should be, I want to tell you about the daily time frame. The daily time frame rarely adds a lot of insight to our analysis, and today is one of those rare days. So if I can just expand the price activity for better visibility, what you will notice here is that versus the highs forged on the price, there has clearly been a massive negative divergence. Since this negative divergence has forged, RSI of the daily time frame has not given a considerable correction. Now, even within a bullish trend, if there is a intermittent negative divergence forged, we expect the RSI to at least test the level of 40. Now, that has not happened. That is the reason why I expect that another correction may unfold and it may take us to the level of 21,000. Basically, this is purely a momentum driven analysis. Another thing, if you notice on the daily time frame, what is very evident is that all the 1, 2, 3, 4, 5, 6, all the 6 candles which are basically part of the upside that we've seen from the bottom of 21,700 to this 22,500, notice the upper shadow there. So on all days, Nifty has opened at its low, rallied, and then given up the rally in the second half. This suggests that there is a lack of confidence in the rally. The presence of an upper wave shows that by the time the closing price came, the bulls gave away and the bears took over. Now, in the last candle, you will see the dimension of the body, right, is barely 50% of the length of the candle. This again suggests that the bear's power has been increasing with each passing day. The bulls were actually the strongest on the 22nd of March, which was last Friday. But remember, this week has been a truncated week. So it is also possible that there was lower participation in the market. It was also tax loss harvesting, Good Friday, Holi, on the occasion of those things. The market has been pretty short. We had a holiday on Monday. We also had a holiday today on Friday. So as a result of that, it can be a truncated peak. However, if we look at momentum analysis, it all suggests weakness. Now, coming to the volume analysis, what worries me or what strikes me as a bearish observation here is that when this first leg or A leg of the rally unfolded, we could see that the volume was increasing. Now, remember, for volume, I prefer to use the MACD with the setting of fast length 20 days and slow length 100 days. So what I'm basically doing is I'm calculating or I'm comparing past 20 days average volumes with a signal smoothing factor of 3 against past 100 days volume. What this tells me, what this does for me is it magnifies the difference it just magnifies the change in volume, because that is what I'm interested in. I'm not interested in the absolute number of the volume, and I'm interested in the way the volume changes. So here what I can see is that whenever the price was declining, right, during the decline, the volume was consistently increasing. Let me use a line tool here to highlight that for you. But when the price started to increase, when the price started to rally, the volume disappeared. It was no longer significant, which means that this rally is happening against poor participation. All right. Another thing to notice is that when the last leg of this rally unfolded, there also we saw pretty weak volumes. This presence of weak volume was also a signal that the rally is losing its strength. But the rally before that, if you notice, in fact, all the rallies that happened before the last leg of the rally experienced pretty good or high volume versus the previous 100 days. So these are pretty significant observations, and basis these observations, I believe that some more market correction can be expected, maybe in the first 2 weeks or maybe one entire month of April. Last year, if you remember, when we ended the financial year and we stepped into April, the year basically began with a strong rally, which pretty much lasted the entire year. Right? I hope all of you have done your loss harvesting. If not, then unfortunately, you've lost the opportunity. Now, with that, let's move on to Bank Nifty. And before I delve into the analysis of Bank Nifty, just want to remind you that if you want to connect with me and if you want to get my market insights, which I keep sharing during live market hours, and also if you want to take advantage of this ongoing offer on my website, on my swing trading subscription, you are more than welcome to participate in this milestone offer. I'm offering a 15% discount on my services. And also, just to, in the interest of transparency, all prices on my subscription are going to increase from the 1st of April. So if you want to connect with me, now is the best time. How do you connect with me? You click this link. I'm pasting this in the comments for you. Just go on Trade with Kavita. Click this link to be redirected to my Telegram channel, or you can go into the search button and just type there Trade with Kavita, right? So you'll see my channel. You'll also see lot of fake channels with similar names. Just make sure that you're not falling for those. The spelling should be an exact match, and my channel has around 5,340 members. So make sure you're choosing the correct one. Now, let's move on with the analysis of Bank Nifty. So what we are noticing in Bank Nifty is that the resistance of 47,250 has done the job that 22,500 has done for Nifty. Right? Bank Nifty is not is still not close to the lifetime high like Nifty is, which means Nifty has shown strong rally. However, Bank Nifty has been showing weak signals. There is a negative divergence on the 3-minute time frame. There is also negative green shift, which does suggest the onset of a correction. So a few weeks back, basically around, I think somewhere around here, when Bank Nifty was below 45,450, I had suggested that the next few weeks might give some opportunity for investing in the banking sector for the short term, but you have to be very stock specific. And I'm avoiding the banking sector. However, the financial sector is starting to look a little bit attractive. Again, select names. And another sector which is starting to look better than it has in the last couple of months is the IT sector, but we'll come to that in a moment. Again, what I'm seeing here is that the rallies that have been unfolding have again been unfolding against pretty weak volumes, except for 1-2 spots here and there. And coming back on the 75-minute time frame, 75-minute time frame is not weak per se, but it's also not strong per se, which is giving us mixed signals. Daily time frame, the daily time frame looks better because here also there was a negative divergence, but we see that the RSI has tested the level of 40 indeed and is now again in the lull state of neither being too positive, neither being negative. So for Bank Nifty, I would really like the resistance of 47,850 to get breached with sustenance. And if that does get breached, then my short-term target for Bank Nifty would be 49,100. Now, with that, let us move towards the intersector comparative chart analysis. As you might be aware, what this chart shows is it compares the sectoral indices listed on Nifty against each other with CNX 500 is the benchmark. So the white thick line that you see is CNX 500, and these are all the indices. I know you might not be able to see the name of the indices, so don't worry, I'm going to read it out for you. So compared to, say, we've been seeing a rally. Let's go back to Nifty and just quickly take a look on when did this rally begin. So 20th March. So from that bottom, if we see, let's identify which have been the winners. So I see this clear king. That's what I want to study. So I can see that the auto and the realty sector has pretty well. So remember this correction when it began, the realty sector took a pretty big hit, but it also bounced back pretty strongly. So when a sector is in strong momentum, then two things can happen during a broad market correction. Number one, the sector might give you an opportunity to enter the rally if you've missed the train so far. Or number two, a sector rotation might happen and the sectors which have been rallying so far might stop rallying and new sectors might come into favor. So let's quickly take a look at the realty sector and see what it has to show us. So if I look at the 15-minute time frame, I see there was this shift here. I see there was this shift here, and there is this negative divergence building. So I would not be very keen on investing. Remember that when here also I see a negative range shift happening. Remember that when a stock tops out, it doesn't just fall at once. It falls in waves, and that is what we are happening here. There is some retracement. Objective analysis is required to assess whether a stock is beginning a decline or whether it is taking a dip. I think with respect to CNX realty sector, the time to make fresh positions or even add to existing positions is gone. With this last leg of the, or rather the last leg rally has gone, with this throwback that we are seeing here, what you want to do is you want to consider booking profits in the realty sector stocks. A lot of times retail traders make the mistake of buying good stocks, entering at the right time, but not exiting them while there is still unrealized profit. They wait too long and the unrealized profit turn to losses or just get eroded. You don't want that. So maybe consider booking your profits in CNX realty. Moving on to CNX auto, resetting the chart. I can see that the rally is pretty healthy in CNX auto, and this dip was actually a very good time to add auto sectors in the portfolio. And I do believe that another opportunity will come. Auto sector is very good for swing trading because they tend to move in cycles. So what I will do is I'm going to set an alert at the level of 32 on the 15-minute time frame of the auto sector chart. And when that comes, I'm going to look into the sector's components like Maruti, like Aisha Motors, Force Motors, or other good stocks in this sector, or even maybe auto component stocks. And I will assess whether they are looking attractive for a fresh position. CNX metal. I believe the metal sector is in a secular bull trend. Within a secular bull trend, you also experience extended corrections. So that extended correction has already taken place. And on the other side of this market correction, I believe CNX metal is going to emerge as one of the winners. And I also believe the same for CNX IT. So right now, I already have some wonderful stock picks for the IT sector, which I am waiting for more confirmations before I give it to the participants of my Trade Together program. So if you want to swing trade with me, then do consider joining the Trade Together program before the end of this financial year. And don't forget to use the code TY. This is a milestone offer to thank you for all the support. My community has grown to 60,000 cumulatively across multiple platforms. So use this code before the end of this financial year to avail a 15% discount on my services. Now, FMCG sector, I am not seeing anything positive there, so you might want to stay away. I see more correction happening there. Pharma sector and healthcare sector, again, already too much rally unfolded, better to not participate there. Consumption and consumer durables, not so positive anymore. There was like, I think a month that I was waiting for a rally. There were positive signals, but I don't think they really materialized well as I would have liked to. I was able to make some profit there, but really small, not happy with that at all. Yeah, that's pretty much it. All right, so let me quickly take a look at the live comments. If there are any questions related to the analysis, or if there are any questions that are related to the session, then I'll be more than happy to prioritize those queries. If not, then we'll move on with the stock request. Mr. Vlogger is asking, ki jitni consistently content create. I am honestly very happy that my YouTube channel has grown to 4,000 members in just 1 year of effort. All right, let's quickly also take a look at the other comments. Vishnu is asking about his portfolio. Vishnu, you can avail portfolio cleanup services. Just hop onto my website, expinvest.in, and there you'll see something called portfolio cleanup, or you'll also see a consultation link. You're more than welcome to book either of them, and I'll be more than happy to help you out with your portfolio. So with that, let's move on with the next and the last segment of the financial year. That is the stock requests. So we see people have responded pretty well. We see a lot of queries. Awesome. Let's move in and start answering. We'll take 10 questions in this session up to here. Awesome. So we've got Swananda. So he's got Apollo 100 rupees corrected from that level of 160. Can I average? So your average price is already 100 rupees. Please just mention the ticker of the stock. It looks like you've mentioned the wrong stock. So let's go back. So it's only Apollo. This is a very illiquid stock, but yes, I think it's a good time to average the stock out. I think it can resume the rally. The underlying trend is quite bullish. There was mild sign of weakness, but that weakness, it looks like, has already unfolded. The stock is very close to the 200 EMA, and the 75-minute time frame is showing a positive divergence. So I would suggest you to go ahead and average out your position. I will recommend you, however, to make sure that you're using the stop loss somewhere at the level of 92 rupees. There is absolutely no sense in losing out your money. And guys, this is also what I was talking about, that if you don't exit the stock at the right time, see, the stock fell 34%, but then it also rallied 30% multiple times to give you an exit opportunity. And it was very evident, if had you stayed on top of your holdings, if you'd been monitoring your holdings, you would have noticed that the stock was struggling to sustain above the level of 133, 134. It did try to do that once, but almost immediately it came back down and it breached this important support level. So price action analysis is very important if you're indulging in short-term analysis. If you don't know price action analysis, then it's always better to get associated with an expert like me or someone else. The next query is from Mr. Chandra Kumar. He's asking for ITC. So should I hold or should I sell? 439 is the average cost price. I think ITC can give a bit of a correction. I'm not very bullish on the IT sector overall. I think it's gone into a bit of a bearish range. See, the problem right now is that there are a bit of a mixed signals. The daily time frame looks bullish, but the lower time frames of 75 and 15 minutes suggest that some correction can happen. And the fact is that ITC has also, from the recent high of 487, it has taken a substantial correction of about 20%. I mean, 20% is a substantial correction for a stock like IT. However, I think it might want to come down and maybe retest this key support level somewhere near the level of 370 before it resumes an uptrend. Remember what I told you about corrections as per Elliott wave count? They happen in waves of 3. So 1, 2, and 3. Now, whether this is the formation of a bottom, or even if this is the formation of a bottom, whether this is going to be an instant rally or whether there's going to be a retracement and a rally, very hard to tell right now. But given that your position is already in loss, I'm assuming that your position is a short-term position, I would strongly recommend you to use the stop loss at the level of 400. If that level gets breached, then you wait for the price to correct further, create a sort of a support, and then re-enter the stock at a better price. So for Nilesh Rastogi, E-Mudra, let's see. Analyzing this after a very long time, and I can see there's been a breakout, which means we have a need to change our trend lines. So this looks like a pretty good trend line to draw, and that's a very strong breakout that has occurred. However, it is also at the same time a bit of a missed train. Actually, that's not fair because rally is very strong with strong volumes, given a little bit of a dip right now. So what is it that you want? You want my inputs, and I'm guessing that you want to make fresh entry in this position in this stock right now. I would recommend that you accumulate your position within this 9% range. So I wouldn't want to see the stock break this very important level right here. So 675 is what your stop loss would look like. So your stop loss on E-Mudra would be 675. And from the level of 675, what you can do is you can start buying the stock in the next week or 2 weeks. Basically, you buy the stock as long as this breakout happens above 827. So your buying range is essentially 830 to maybe 700 rupees, pretty big range. And you try your best to average down your cost. Set up a GTT buy order at 716 rupees. Okay, set up a GTT buy order at 716 rupees and hold the stock. It's very hard to give a target for the stock, but the upside looks pretty strong given how strong the volume is. I would suggest you keep trailing your stop loss on the position. Let me attempt to assess a target here because I can see another slope developing. So the short-term target that I would give you is 18. So you don't want to keep holding the stock blindly because even though the volume is pretty strong, even though the unfolding is happening with good volumes, if there is a negative divergence that develops on the daily time frame, you want to get out because pretty good chances the stock can correct 20-25%. I'm not very sure about the long-term prospects of the stock, so I'm not going to comment on that. It's asking for the analysis of HDFC Bank. So HDFC Bank, the good thing is it's taking strong support at the 200 EMA of the weekly time frame, and the daily time frame has given a sort of a positive divergence. So in the short term, I am expecting some upside in HDFC Bank, though I wouldn't bet my money on it. But if you're holding a position in HDFC Bank, you can definitely continue to hold on to it with a stop loss at the level of 1392. My target for HDFC Bank would be the filling of this gap somewhere around the level of 1632. So the stop loss for you is about 1390, right? Around 1390 is your stop loss, and your target is 1630, 1632. Let's move on with Praveen's request. He's asking for the analysis of fresh entry for swing trading. So Divas is actually in my pink list, which is the list which I monitor for potential fresh entries. It is on that list, but what is it that I'm waiting for? I'm waiting for the price to come back a little bit lower. The stock is very much ready for potential long position. Reason being that the RSI is very subtly moving into a positive range shift. There's been strong support from this trend line here, and I don't want to take a position right away because I don't want to rely too heavily on 3350 as my stop loss. And if I set the next best stop loss, it's a little bit steep. It's like 4%. And a rally unfolding here, I expect my target to be 10% higher at 3787 from a conservative standpoint. So the risk reward ratio is not very attractive. So that is the reason why I would want the price to come back in the range of 3390 to maybe 3360 before I consider making a long position. That would significantly improve my risk reward ratio. So wait in Divis Lab, don't be in a hurry. Wait for the price to come back down and use the range of 3280 as your stop loss and 3785 maybe, or 3790 as your potential target. So Mukesh is asking for Nestle India for swing trading. Nestle India is not a very good stock, I would say, for cash only swing trading because it moves painfully slow given the giant that it is. However, the rally that is unfolding is pretty good. That being said, I would not recommend you to go long immediately. I would want the stock to come back down between the level of 2537 and 2495 before you go ahead and make an entry here. But mind you, what I told you about FMCG stocks, I'm not very hot about them. I think there are better opportunities available out there. So remember, you always want to stay with the trend. Follow the momentum, don't go against either of them. Rahman Sharif is asking for IIFL analysis. What is the future of IIFL? It's a bit of a crystal ball question, isn't it? 20 to 30 days, not good. Absolutely not good. I don't like to touch stocks. So much happening. There was very clear-cut signal of topping out happening right here in the stock. It created a high here, and there's a very clear-cut negative divergence which ended up pretty painfully for IIFL. I would not touch this stock given the conditions right now. In fact, it has a tendency to give this knee-jerk reactions whenever it tops out, and then it just ensues into a strong rally. Last time it fell 80%, not even from the top. If we compare what it fell from the top, it was almost 86. I would expect the stock to retest the level of 227 before I even consider looking at it for any potential position. If you are holding it, I think it's best to rip the bandit off, let the wound heal, salvage your capital, participate in better opportunities. Mr. Samba Shiva Rao is asking for the analysis of AB Capital. I don't think AB Capital looks attractive. I think it is showing signs of weakness all the way from the daily time frame to the weekly time frame to the 75-minute time frame. Be a short-term rally in the 15-minute time frame. So if you're holding the stock, you might want to consider exiting it. I think the stock can maybe retest the level of 187, but it is not a potential fresh entry candidate. Please do maintain your stop loss at 165. So 165 is stop loss, 185 is target, and the comment would be no fresh entries at this. Abhinav is asking for Ambuja Cement. Should he buy more or should he sell? He's bought an average price of 600. Seems to have bought a little bit into the rally. I would say you bought it when it was a good time to actually book your profits in the stock. I would strongly suggest that you go ahead and book your profit because the daily time frame is showing negative divergence. The 75 is showing strong negative range shift. Even if the stock does move upside, I would rather make a fresh position if I see a breakout above the level of 640 with strong volumes. I am seeing as the rally unfolds into this last painful leg, the volume is not as strong as I'd like it to be. The volume has been dying out, which is a signal to me that it's not a very good time to participate in this stock. Now let's take a look at Saxoft for Mr. Aman Kumar. So you probably bought it recently, and Saxoft is a pretty good, I think it's an IT company. It is an IT company. Let's first start with drawing our trend lines. Says median trend line ready. That looks fantastic. So I think the stock has given a pretty good correction from the topmost trend line to the very next support trend line, 40% upside. So this is a very good opportunity to enter. So I would say that you made a very good entry here, Mr. Aman Kumar. I would strongly suggest you use the stop loss at 208. Now I know that's a pretty big stop loss, but the nature of the stock warrants it. It's almost an 18% stop loss. Having said that, I would expect an upside of 74%, again, given the characteristics of the stock. The underlying trend is pretty strong. All the way as long as the rally was unfolding, except in the last leg, we saw pretty good volumes. And I will forgive the lack of volumes in the last leg because we've already seen a correction. So the correction here happened with strong volumes. Here it happened with strong volumes. Here on the upside, the volume picked up. Here again, there were like moments when the price showed strength with strong volumes, which is good. And even the last leg that we see, so on the upside, we don't see a lot of positive activity, which is not good. But on the downside, we see negative activity, which is bad. I would expect the price to retest the level of 225, where you can potentially add more to the position. But you should definitely use the stop loss of what I just mentioned, around 210, because if this low gets breached, then the stock can just plummet to the next support level, which could be anywhere between 140 to 100. You don't want to see that happen in your portfolio. So now for Mr. Anoop, let's take a quick look at the stock. Poonawalla. Say you want to make a fresh position. Fine, let's do a quick analysis. There are much better candidates for long position in the market. I always say never buy a stock after the rally. Poonawalla specifically, I would mark this stock as a red flag. I would not want to make fresh positions here for short term or long term. It seems to have exhausted the momentum, and whatever rally happens next is not really going to be worth it in the terms of relative strength. So I would suggest you to stay away. Guys, with that, we come to the end of the last session of this financial year. I am so excited. Thank you so much for all the support that you've shown me. And on the occasion of Good Friday, occasion of Holi, and to celebrate the milestone of crossing around 60,000 followers across multiple platforms, I'm very happy to give you a 15% discount on all my services. Just join my Telegram channel, Trade with Kavita. Link is already in the comments, and you can see more details about this ongoing offer and policies for the next financial year, which will help you make a decision. And if you have any questions, you can connect with your team, but I'm not sure if my team is going to be available during this weekend. You can try. All right, so with that, we'll take your leave. Thank you so much for joining the session, giving me your time and attention. I will see you again on Wednesday, 5 p.m. So if your questions did not get answered today, be sure to join me on Wednesday at 5 p.m. to get the answer to your stock requests. And for the 10 people who did get their questions answered today, my team will be reaching out to you with the specific levels and the analysis that I have given. You will also get the link in case you want to go and review the analysis that I have done for you. So thank you so much. Have a great weekend. I will see you on Wednesday at 5 p.m.